I want to talk about the bid by GameStop to acquire eBay, or the failed bid. To catch you up, GameStop, sort of the star of the meme stock world, decided that they were going to launch a bid to acquire eBay for $56 billion, which sounds like a great idea, except for one problem, which is GameStop doesn't actually have $56 billion. GameStop seemed to have had a notion that eBay would have some interest in acquiring GameStop equity. I don't know why they thought that would be. There's no way that deal would have gotten past the board of directors. And there are two pretty damning reactions to the deal. Number one is that eBay's stock hardly moved. Normally, if there's any credibility behind the deal at all, then the target's stock price will shoot up to converge at the offered stock price. And then, in what is basically the corporate version of a middle finger, eBay's response to the offer was, "We have determined that GameStop's bid is neither credible nor attractive." And they said, "We don't believe you have the money, and whatever you offered, you probably wouldn't have had the money to do it even if you did so. Don't waste our time." So there's a lesson here. When you're going to make offers, realize that your credibility goes along with it. And people don't like to have their time wasted because there's a fiduciary responsibility to take any quasi-plausible offer seriously so that you can demonstrate that you're upholding your fiduciary duties. eBay kind of had to spend time on this, even though I think they really didn't want to. And I'm guessing there was a lot of eye rolling going on in eBay's boardroom. And GameStop didn't exactly have a ton of credibility walking into it. Their claim to fame is being the darling of Robinhood and becoming a meme stock. And they got a market cap of $12 billion, but $9 billion of that is cash. The operational value of the company is different. Now, I don't blame GameStop for looking at making acquisitions. I think that they absolutely should. They're cash rich. If they're not going to distribute that to shareholders, then they need to be making acquisitions to do something to improve their bargaining position, because GameStop is in a tough spot. Games are going digital. The days of these physical games with cartridges and cards and discs, they're going away. So I get why GameStop would want to make an acquisition like this, because a lot of gaming related toys and paraphernalia do get traded on eBay. So there's a strategic sensibility to it, but the nature of the deal just didn't make very much sense. And one argument says that maybe GameStop makes this deal because they want to make a splash, and somehow that creating the buzz makes them appear serious. I think it does the exact opposite. I think that when you offer a deal that is just preposterous, it makes you look like a clown. I think GameStop has done immense damage to its own credibility in the acquisition markets now, and it's going to take some time for that to rub off, because on the surface, from where I sit, it looks like it was no more than a publicity stunt. And I think the market thought that way too, based on the way that it reacted, or more properly, didn't react. So that's what I think. What do you think? Whether you agree with me or not, leave something in the comments below, and I wish you all a very pleasant weekend.